Big developments are unfolding in the world of SoFi stock, and today's news is nothing short of game-changing. We've got a major update that will reshape how investors see this stock moving forward. There's a shift happening in SoFi's strategy, and it's becoming crystal clear where CEO Anthony Noto is steering the company. Hello everyone, welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads and also enter our giveaway. But before that, alert this is not a financial advice video. The latest earnings report revealed a strong top-line performance with full-year revenue guidance for 2025, yet there was a minor miss on EPS expectations, with analysts eyeing a 29-cent target. However, what stands out most is SoFi's new approach, an aggressive push for growth, even if it means delaying immediate profits. Rather than playing it safe, the company is seizing the moment to expand its market share rapidly. This is a different playbook from what we saw in early 2020 when SoFi took a more cautious stance to focus on loan management. Now the focus is on capturing as much ground as possible while the opportunity exists. This could mean a temporary plateau in revenue growth for the next couple of quarters, but the long-term vision is unmistakable. SoFi is prioritizing scale over short-term profits, setting up for what could be an explosive future. A few days ago, I touched on some concerns about SoFi's Galileo technology platform, but let's put things into perspective. Galileo is just one of three key business segments, and it only accounts for about 17 to 18% of the company's revenue. While there have been delays in its expected growth over the past 3 years, it's essential to recognize that SoFi isn't dependent on just one part of its business. In fact, financial services and lending are the real drivers of the company's rapid expansion. SoFi is positioning itself as one of the fastest-growing fintech firms in the U.S., consistently outperforming traditional banks. The most recent updates reinforce the idea that 2025 could be a landmark year for the company. Anthony Noto has repeatedly emphasized that next year will provide the best macroeconomic conditions in SoFi's history. While the management team tends to be conservative with their guidance, their top-line revenue projections for the upcoming year suggest otherwise. They're forecasting growth of 23 to 26%. But if we consider last year's trend, where they initially projected 14% and ended up delivering 26%, there's a good chance that actual growth could land closer to 35.5%. That's remarkable for a company that's already profitable. Despite addressing some bearish sentiment in my previous coverage of Galileo, I want to make one thing clear. I remain confident in SoFi's long-term prospects. I haven't sold a single share, and my outlook for the next 3 to 5 years remains highly bullish. The key now is for management to be more transparent about each segment of the business. Retail investors have stood by SoFi through its lowest points, showing unwavering support just as the CEO himself has done. Now, it's time for the company to reaffirm its commitment to its investor base. Looking at the stock price action, we recently saw a 5% drop, largely fueled by negative sentiment surrounding Galileo. But let's not overlook the role that analysts play in these situations. Just yesterday, analysts took advantage of this moment to reinforce their bearish stance. Compass Point, for example, maintained a sell rating on SoFi, raising their price target from $4 to $6. These moves aren't random. Analysts watch for opportunities to push a narrative, often aligning their ratings with broader market sentiment. A tweet from Alejandro Chavez highlighted the bearish sentiment, and Anthony Noto himself responded, acknowledging the concerns. This tells us one important thing: management is listening. While there's growing chatter about the Galileo platform, it's crucial to remember that the company's leadership is fully aware of the challenges and opportunities ahead. Over the past 3 months, SoFi stock has been trading in a tight range, fluctuating between $14 and $18. This period of consolidation could be setting the stage for a massive breakout in 2025. With the company's strategic focus on aggressive expansion, the pieces are falling into place for a significant upward move. The key for investors is to look at the bigger picture. While some segments like Galileo may take longer to gain momentum, the overall trajectory for SoFi remains highly promising. We could see this segment gain traction in 2026, but even if 2025 turns out to be a year of strategic positioning rather than explosive gains, the long-term outlook remains incredibly strong. So what does this all mean for investors? It's important to stay focused on the larger trend. Short-term fluctuations and analyst-driven narratives shouldn't deter long-term conviction. SoFi is playing a long game, and all signs point to a major leap in 2025. If management continues to execute on its vision while maintaining transparency with investors, the stock has the potential to rise significantly. This is a pivotal moment in SoFi's journey, and those who understand the company's broader strategy stand to benefit the most. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.